Hello, hello everyone. Happy new month to you. Good morning, and depending on what time zone you're tuning in from, good afternoon and good evening to you all. And welcome to a brand new month, a brand new trading week. In fact, if you're back once again, and if you are tuning in for the first time, of course, this is the Forex Morning Mastery. We run this three times in a week, where we meet every Mondays, Wednesdays, and Fridays to break down the markets, get aligned, and ways of clarity. My own name is Sheriff Daramola, and I'm going to be taking you on a trading journey for the next 40-45 minutes, depending on how soon or later we round off the session. What's interesting at this juncture this week kicks off with the US dollar holding strong after last week's hawkish tone from the Federal Reserve, and markets are opening November with that typical first day of the month optimism. Beginning of the month, new books, fresh capital flows, and traders ready to set the tone for the weeks ahead. And this week, I'm going to be watching the US crude oil, the GBPUSD, USDJPY, and the gold market. And in this session, I will be taking you through each one of them together, where we shall be looking at things from both technical and fundamental perspective to identify best opportunities from any structural detail we can get on the chart. During the weekend, I wasn't able to share with us my outlook for the week. It was a hectic one. I've been trying to see how I can handle my busy weekend. Unfortunately, I wasn't able to turn up on Saturday and Sunday to share my market view. But thank goodness, today we are going to be doing a top-down analysis on all of these assets we are going to be looking at this week. And if you are a fan, or let me say, if you are planning to trade any of these assets I talked about, that is the US oil, the GBP USD, USDJPY, and the gold, you don't want to miss out on the deliberations we are going to be having this morning. If you're new, you hit that subscribe button. This is how we grow together. Um, Click on the like button, stay sharp, and let's navigate this changing market side by side um, every week. So, the first thing we are going to be looking at, as always, is to go into the US dollar market dynamic, right? And in the US dollar market, we want to see how the sentiment is playing out in the market, especially when we are trading major instruments that has a lot to do with the US dollar. And of course, if we can get a perspective into what may likely happen this week, then we can easily key into that direction on the respective assets that we are. So, as always, this is the DXY chart you see on my screen, the 4 hours time frame of the DXY. And for those of you who are new with us, or probably you don't know what this is, the DXY is an instrument that gives us an overview, a general view of how, or let me say, the general view of the performance of the US dollar over a certain period of time. And what we see here is the 4 hours time frame, and the structure we marked out last week still remains the same. For those of you who were with me last week, remember we had this beautiful ascending trend line since mid-September, which is still holding, consistently respected that trend line. As you will see, higher highs, higher lows, higher highs, higher lows, higher high. At the beginning of October, we saw a higher low here, and right now we are at a higher high as we saw price culminate last week at the $99.85 level, breaking out of that key level at the $98.50 level for the first time in 3 to 4 weeks. Now, last week trading session, this was where price action started. It started somewhere around this trend line as market respected that trend line one more time. And the fact that price was unable to break down the trend line despite the Fed cutting interest rate last week shows that this trend line is a formidable one. So last week we saw the Fed cut rate by 25 basis point basis point. And of course, after the cut, Powell went on to give an hawkish remark, hinting that this could be the last cut for the year. Now, that shifted market sentiment from the easy policy that everyone had held on to since the beginning of the year to the Fed might be done easy. Now, this of course, pushed U.S. Treasury bond yields, and you know when the Treasury bond yield is doing very well, the dollar tends to continue to gain value. And to add to that is the renewed geopolitical tensions, U.S.-China chip restriction. We also have the U.S.-Russia strikes and a prolonged U.S. government shutdown. And traders found more reason to park money in the dollar as a safe bet, right? And this whole narrative supported the momentum we saw here last week, breaking out of that $98.50 level. Now, something interesting happened on the final trading day of the week. Let me zoom in so we can see. And one thing you will notice here is that as soon as price got into that $99.85 level, buyers have been finding it difficult to break through that particular area. And this for us is a sign that there might likely be an indecision going on in the market where markets are looking to see whether they should continue to hold on to the US dollar or it's time to do some profit taking, which might bring price back to either the support the key level at the $98.50 level to continue the uptrend or drop to as far as the trend line before another momentum begins. Now, as we step into November's first trading day, markets are carrying that bullish momentum from last week. As you will see, the market is forming something that looks like a bullish rectangle pattern. So we have the impulsive move, price confined within a rectangle sort of pattern. Depending on which perspective you are looking at it from, you could call it a flag pattern, you could call it a bullish rectangle pattern. But the most important thing here is looking more like an uptrend continuation pattern. Now, the focus shift to this week's high impact event. Now, if we look at the economic calendar here, today, Monday, November 3rd, we are looking at the ISM manufacturing PMI and a bunch of Fed official speeches coming up later in the day. Then tomorrow we're looking forward to the a couple of speech too as well. Then the ISM, a couple of speech here on Tuesday. Where's Tuesday? Okay, here Tuesday, then we have the JOLTS job openings. I doubt if that will happen due to the US government shutdown. But on Wednesday, we have it the um, ADP employment change. That's a labor-oriented data. We have the ISM services PMI, and then on Thursday, I don't know why my mouse keeps returning back. So on Thursday we have nothing. Okay, we have a bunch of Fed official speeches. Then on Friday we have the average hourly earnings and the almighty non-farm payroll. Now, prior to the NFP, if the data comes out strong or Fed officials from the speeches they give echo the narrative that was pushed forward by Powell last week, we could see the dollar break out of that $99.85 level to continue the uptrend scenario that started last week and possibly stretching towards new highs. But if numbers disappoint or the Fed officials soften its tone, we could see some short-term profit-taking activities, which could bring price, which could drag the dollar back maybe into the $98.50 level or the ascending trend line to retest it before finding support again. So in short, fundamental still favors the bullish scenario as you will see, but today's tone and this week's data will decide if the dollar keeps climbing or pauses for breath. Now, to help us navigate the US dollar market, this is the simple structure I will be using. And if price breaks down the $98.50 level, this will confirm to me that we could be going through a pullback as a result of profit taking and then look out for support anywhere between this ascending trend line and this trend line before another wave happens. And if price comes into the $98.50 level and sellers find it difficult to break through, continued buy pressure will trigger bullish expectations. And if price breaks out the $99.85 level, that will further support an uptrend move. So technically and from a fundamental perspective, we are still within an uptrend scenario. So the path of least resistance here is to the upside. So what we are deliberating on right now is what path, what pattern will price action take? And of course, time will tell, but we will be using this structure to help us understand what's the sentiment and how market participants are digesting the fundamentals. Now, with this information we have gathered here, let's go into the US crude oil market. So I will be taking you through a top-down analysis on this market since I didn't share any market review during the weekend. So we will be taking it one step at a time. This could take a longer time for us to run through, but I think it's better we do the needful. So right here on the US crude oil market, as you will see, the descending trend line we marked out last week still remains intact. This descending trend line captures the series of lower highs since June of this year. That's about 5 months of historical data. As you will see, price had consistently respected that trend line. And of course, when price trends below a trend line, we want to continue to look out for selling ideas, except if some surprising narratives pops up in the global market. Now, if we look at what has been going on here in the last 1 week, so last week this was what we saw. Price of crude oil increased tremendously last week following the easing tension between the US-China relationship. And then we also had a scenario where the EIA or the API report showed that demand for crude oil in the United States increased last week. So we saw this whole move started somewhere around here last week and then found support between the $59.50 level and the $60 area. Let me say the $60 area in short. As you will see throughout the second half of last week, sellers were unable to break down that demand zone, making it a crucial juncture going into the new week. And of course, you will see what I've done here. I was able to mark out my key level at the $60 area. And interesting enough, if we go to as far back as the beginning of October, we saw how that $60 area played a significant role in determining the direction of price action. At the beginning of October, it was a demand zone, as you will see here. Then fast forward to the second week of October, it became a selling niche as price broke down that particular structure. Then fast forward to last week, we saw price come back above the structure and maintained momentum above it, making it a crucial juncture going into this trading week. Now, with the way things are going, you'll see that the week started with a bullish trend, bullish momentum. But before I go into what's happened this week, I want you to understand here that price is at a crucial juncture. These are the descending trend line we marked out earlier since June. This is the primary trend line here, the thick one, and then we have the temporary one right here. Now, one thing I have noticed is how it appears buyers are struggling from this particular point. The same thing also happened on Friday. We saw after this engulfing bullish candle, price came into the structure. We saw some selling pressure, consolidation happen. But since this week began, we can see that the market is looking a little bit choppy around that trend line. So we don't know if price will respect it and continue to the downside, or it will support the next wave of bullish momentum. Now, when we scale down into the 1 hour time frame, we will begin to see things much more clearly. And since the new week began, this is the new week, we saw this massive engulfing bullish candle spring out from the $60.69 level, breaking out of that descending trend line we talked about earlier on the 4 hours time frame to initiate a an idea that the buyers are getting stronger. Now, why is that happening? Well, during the course of the weekend, there is this report that OPEC is going to be pausing output hikes for early 2026 amidst oversupply fears, while tension in the Middle East and Ukraine drone strikes on Russia's oil ports had a bullish tone over the weekend. And as a result of that, the market reacted positively at the start of the week with this engulfing bullish candle. And since that happened, we saw a resistance at the $61.23 level as price goes into a consolidation. Now, if we also consider the stronger US dollar from the Fed's hawkish stance, we may likely see a cap in this uptrend. And if we also consider the fact that price is around that descending trend line, we should not in any way ignore the potentials that sellers can also come into play. So while we have a bullish idea, price remains above the trend line, we should not ignore the possibility that sellers can come in, and we should also get prepared for that scenario as well. So at this juncture, I want to think that traders may want to be cautious, or let me say cautiously optimistic as the month opens, awaiting tomorrow's API inventory data from the United States for fresh direction. And to help us navigate this anticipation, we have this new structure here where I can see price is confined within the $60.69 level and the $61.23 area, where you of course know what we expect to do at this point. It's either price breaks out the resistance line to give us an opportunity to buy, or break down the support line. In fact, if you look at this closely, by the time price breaks down the support line, we will be below that descending trend line, which definitely could incite selling ideas. So personally, I already placed a buy position on my trade. As you will see, the position is not doing very well at the moment. So hopefully price moves as expected. But if it doesn't, it's all well and good. It's the start of the week. We still have like 4 more days to go and to recoup whatever loss we incur if that is going to be the case. But I strongly feel that price breaking out of that descending trend line, the sentiment in favor of OPEC's cutting down on their output expectations may likely give the crude oil some room, maybe into the $62 areas. We're looking at something between 60 to 80 pips of price movement before um, something significant happens again. So personally, I remain bullish, pending until the structure states otherwise. And that is what I will be using to navigate my market for the first half of the week. If price breaks down the $60, 69 cent level, then I will be joining a sell after a retest of structure. So my stop loss on this buy position is right below the support line here. Is that so? Okay, that was wrong. So let me just replace my stop loss. My stop loss is right below um, that um, that support line here. So let's see how the market is going to play out. If you have any question, feel free to let me know in the comment section. So I'll take about 5-10 seconds off. Let's see if there are any questions before we move on to the next asset, so that we all know that we are all on the same page, right? Stay tuned in. All right. I guess we will be moving on to the next asset on our watch list. Stay tuned in. So the next asset I'm looking at this morning is the GBPUSD. And remember, we were selling the the GBPUSD last week as we took advantage of that bearish move starting from somewhere here, and then it ran all the way down into the 1.3100 area, giving us a minimum of about 200 pips before the market went into a consolidation between Thursday and Friday trading session. And for those of us who are part of this journey, well done, kudos to you for being faithful to our analytical approach. Now, going into the next to this week, we can see the price of the pound sterling remained below that descending trend line. So you can see this descending trend line captures price action from mid-September. That's about 6 to 7 weeks of price movement. And at a point in time, price broke above that structure, and we were feeling that the pound may gain traction based on that fact, but the fundamentals from the UK didn't really give the pounds that support it needed. And following the strength of the US dollar, we saw price drop back below the descending trend line. And of course, at this reasonable to consider selling ideas since price remains below the descending trend line. Now, um, like I did say earlier, the dollar is still looking very strong at the moment, especially after the Fed chairman dismissed another December rate cut. Then on the other side of the pond, the United Kingdom fiscal worries and growing expectations of a Bank of England rate cut may also weigh in seriously on the current market sentiment as traders eye Thursday's Bank of England interest rate decision. So we can see by 12 p.m. UTC on Thursday, the Bank of England will be deciding whether to cut or maintain the current interest rate. And the mean that the rate will be kept at the 4% that it is at the moment. And if it happens that the Bank of England cuts interest rates, this may likely incite a massive move to the downside. So the mood right now on this first trading day of November is leaning towards a defensive approach with sellers still holding control at this point. Now, with my key level at the 1.315, I want to be using this one here to guide my decision going into this week's trading session. So, and the reason why I chose the 1.315 is more evident on the daily time frame. So let me quickly share with you what I supported me using the 1.315 as my key level. Now, I went to as far back as when was that? August of this year. That's September, October, November. That's about 4 months. And one thing I noticed is how this 1.315 had played a significant role in determining whether price will move up or move to the downside. So you can see around this point in August, it was more choppy for a while. Then at the beginning of mid-September, the support line, though it didn't last long, within a week at the beginning of last month, we saw price drop below that structure. Then that same structure for a while in April, as you will see here. Then it broke out the structure here again, that's in April. And since then, what every time sellers bring price back into the structure, they find it difficult to break through. And you saw what happened here in May. You saw what happened here in August. As you can see, every time price comes in, buyers take over the market and push price up. It came in here again in August, it pushes up. Then right now, as at last week, at the end of last week's trading session, we saw price close exactly at the 1.315. So this area in the last April, May, June, July, August, September, the last 8 to 9 months has been a strong support line. Now, you can see why this area for me is serving as my key level going into this week. Now, the question, will this line support price again? That is, price maintains the support and then continues the uptrend from there. Or will the 1.315 be broken to the downside, which makes this whole juncture a crucial one. So that is basically why I chose the 1.315 as my key level for this week. Now let's go back into the 4 hours time frame. Now price is below the 1.315 at the moment, and you know how we do it. We want to be looking out for selling ideas. Now when we scale down further into my execution time frame, that is on the 1 hour time frame, this was what I was able to find. Now you can see, so the week started on a bullish note, right? Price to 1.31300 area, just right here. Bullish candle. Price found higher highs, higher lows, higher highs, higher lows of this point, where we consider the fact that the market chances that price could drop further remains intact, and fiscal worries in the UK, the labor market not doing well, and the um, the budget, the borrowing budget too, is not too good. I think the path of least resistance is to the downside. So if you want to be part of me on this trade, you might sell stop order below the 1.313 where I did sell. I've sold already, and with your stop losses right above the support line, let's say to give enough breathing space right above the key level, which is about 20 pips. So that is what I'm looking. However, if buyers want to come into this market, what are the conditions that will make me feel confident to buy? Well, to buy now, if I'm not yet taken out of the current buy position, to buy the GBP USD, I would like